Good morning. We will pay attention to the Salaries Journal today. There are 3 salary employers and no wage workers. The information below applies to the salaries for August 2013. So the basic salaries is 72,000 and then the workers receive an additional bonus of 6,000. So that means the total amount that they earn or that is the expense for the business for salaries is 78,000. From the employee salaries, deductions are made for pay-as-you-earn, pension fund, medical fund, and UIF. So if we add up all these deductions, it gives us a total of 39,540. So that means, although their salary is 78,000 and that is the expense for the business, the employees will not take 78,000 Rand home. They will take the 78 minus deductions, and that means the net salaries are 38,460. And that is the amount that the people take home. So net salaries is the money in my pocket. Gross salaries is the expense for the business. Okay, the employer also contributes to the pension fund and to UIF. According to law, the employer must contribute an equal amount that's deducted from the employee. The employer must contribute exactly the same amount. Pension fund, they can decide whether they want to contribute double the amount, half of the amount, equal amounts. That depends on the employer. If we post these entries to the general ledger, it means that we will show that the expense for salaries is 78,000. And expenses for a business increases on the debit side. Deductions from those expenses are pay as you earn. So that means the business owes the money to SARS and will have to pay the 25,920 to SARS in the future. Then there's also pension fund deductions of 6,100. So the employer will have to pay over 6,100. To the unemployment insurance fund, the contributions of the employee is 720. And to the medical fund, the contribution is 6,800. And then the amount that the employee will actually take home is still owed to the employee at the end of the month. So we will open a liability creditors for salaries and we will credit the account to indicate that is the amount that must be paid in the future for salaries. If we add up all these amounts on the credit side, it will equal the 78,000 on the debit side to complete my double entry. In this case, the employer also contributes to the pension fund. So that means these contributions are also expenses for the business. So it's not only costing them the 78,000 for the salaries, this is also part of the expenses to employ workers. So we will open an expense account for pension fund contributions and debit it with 9,150. This is the expense. They still have to pay over this money to the pension fund. So we will credit the pension fund with 9,150. For the UIF, the employer will create an expense that will increase on the debit side with 720, and they will show that they owe the 720 to the unemployment insurance fund. So at the end of the month, the money that's outstanding that will be recorded as liabilities are all these liabilities for money that's owed to the different funds and to the employees. All the amounts that will be contributions and the salaries that will be recorded in the income statement as expenses will be your nominal accounts. And all these others will go to the balance sheet as current liabilities. What is the difference between a deduction and a contribution? A deduction is taken off the employee's salary, so it means it reduces the salary of the employee that he will take home. A contribution is an extra cost for the business because they contribute on behalf of the employee money to the pension fund, unemployment insurance fund. So both these deductions from the salary will be contributions that's paid on behalf of the employer to the various funds. Remember that the amount that's paid as salaries to the employees is always the amount after deductions. The cost that will be indicated as salaries in the income statement will be the gross salary plus all contributions. And the amount that will be paid to SARS will be the amount deducted from the salary of the employee, because the business will not contribute any tax on behalf of the employer. For all the other funds, the business can decide to contribute an additional amount. The total amount that will be paid to the pension fund will be the amount that was deducted from the employee plus the amount that the employer contributes.